Markets turned into corrective mode last week and pared back some of the powerful moves made back in January. Comments from central bankers were the main driver that halted the near-term trend and triggered the pullbacks. The euro was broadly lower after European Central Bank President Draghi mentioned that a strong euro could slow the region's economy. The Japanese yen recovered as Finance Minister Aso said the recent decline was too fast. Sterling rebounded as incoming Bank of England Governor Carney dented speculation of a radical change in monetary policies. Meanwhile, the Australian dollar was weighed down by a dovish Reserve Bank of Australia monetary policy statement. The US dollar benefited from the move in the euro and closed higher against other major currencies except the yen and sterling. The dollar index has indeed closed above the 80 psychological level again. The developments last week showed that markets have turned into a corrective mode in general, but we'd like to emphasize there is no evidence for a change in trends yet. We're staying medium-term bullish in euro and bearish in yen. The coming weeks would present opportunities and to add to these euro long and yen short positions. And we've maintained that the euro-yen will continue to outperform other yen crosses ahead. However, for the short-term price actions in euro and yen pairs will likely be choppy with a downside bias in euro and an upside bias in yen. And thus, we'd tend to avoid these pairs in quick trades. Instead, US dollar-Canadian dollar's strength on Friday raised the chance of a rally resumption with Aussie dollar-US dollar staying soft. Thus, for this week's trade, we'd prefer US dollar-Canadian dollar longs and to a slightly lesser extent Aussie dollar-US dollar shorts. In the Eurozone, strength of the euro was a major topic among officials as French President François Hollande expressed concerns over the strength of the single currency and called for a currency policy. His idea gained support from Slovak Prime Minister Robert Fico, who said that government would support such policy. Greek Finance Minister Stanaras also said he's concerned about the high level of the euro. However, German Chancellor Merkel's spokesman Seibert noted that exchange rate policy cannot achieve sustained competitiveness, and isn't an appropriate instrument. Seibert noted that the recent gain in euro compensated for a massive depreciation during the debt crisis and that's not such a bad thing. The European Central Bank left the main refinancing rate unchanged and announced no new stimulus program. The overall tone of the statement remained dovish, noting that weakness in the economy remains. However, recovery would be seen later in 2013, with domestic demand being supported by an accommodative monetary policy stance, the improvement in financial market confidence and reduced fragmentation, and export growth benefiting from a strengthening of global demand. The European Central Bank has clearly noticed the strength of the euro, but President Draghi reiterated the position that it is the effect on growth and inflation that will make them react. In the UK, the Bank of England left rates unchanged at 0.5% and kept the asset purchase programme at £375 billion. The sterling rebounded as incoming Bank of England Governor Carney talked down chance of radical changes in the central bank's policy. In his testimony to the UK Parliament's Treasury Select Committee, Carney said that flexible inflation targeting, as practiced in both Canada and the UK, has proven itself to be the most effective monetary policy framework implemented thus far. But the bar for change to any flexible inflation targeting framework should be very high. The comments disappointed some investors that hoped for adoption of nominal GDP targeting and more aggressive easing. Meanwhile, Carney also emphasized that a credible plan is needed in advance for unwinding of the assets purchased, in order to maintain confidence. The Japanese yen was initially sold off after news that Bank of Japan Governor Shirakawa would step down on March 19, almost 3 weeks earlier than the originally scheduled end date of his term. With the new schedule, the new Bank of Japan governor and 2 deputies would be able to be sworn in simultaneously. The move will help Abe accelerate the Bank of Japan's policy shifts. It's speculated that the short list of candidates to succeed Shirakawa includes Asian Development Bank President Haruko former Bank of Japan Deputy Kazuma Saiwata and Toshiro Muto. But no matter who Abe chooses, it's believed that the new governor would take strong easing steps soon after coming into power. Finance Minister Aso's comments were contradicting yet market-moving. Last weekend, he said the weaker yen was a result of the policies aimed at ending deflation, but not the goal. He hit back at Europe's claim that the Bank of Japan's move would contribute to a currency war, and said that Japan endured without complaining when the yen was strong as a result of the global financial crisis back in 2008. However, before the week closed, Aso said that the yen weakened more than we intended in the move to around 90 from 78. Aso's comments seemed to be inconsistent as he mainly talked up the yen whilst also talking down the yen on other days. Nonetheless, it should be noted that his comments were about the pace of the decline in the yen and not about the value of the yen. So it's actually seen as aiming at cooling down the selling momentum only. The Reserve Bank of Australia left the cash rate unchanged at 3%. Yet, policymakers indicated in the accompanying statement that possibility remained for a further rate cut as inflation was contained by sluggish job market. The statement was dovish, reiterating the view that the mining sector has almost peaked. The Reserve Bank of Australia's outlook on growth showed little change from December statement, noting that global growth is forecast to be a little below average for a time but risks around this central scenario appear to have abated. Later in the week, the Reserve Bank of Australia released its quarterly monetary policy statement reducing its economic growth and inflation forecasts as mining investment is expected to peak. Both fiscal consolidation and the persistently high level of the Australian dollar will weigh on growth, and there is little sign of a near-term pickup in non-mining business investment. The central bank forecast growth this year would be below trend, at around 2.5%. CPI and would rise 3% in the year to June 2013. The Reserve Bank of Australia forecast the employment growth to remain modest over the course of this year, before rising gradually over 2014. The unemployment rate is expected to edge higher. Australian employment data was solid with a 10,400 expansion in January while the unemployment rate was unchanged at 5.4%. The New Zealand dollar weakened earlier in the session on mixed job data. Employment unexpectedly contracted 1% quarter-on-quarter in Q4, versus expectation of 0.4% growth quarter-on-quarter while the unemployment rate dropped more than expected to 6.9%. The Canadian dollar dropped sharply on Friday after poor job market data, which showed a 21,900 contraction in January versus expectation of a 4,000 growth. The unemployment rate dropped to 7%. In China, the People's Bank of China warned in a report that the economic recovery and demand expansion may pass into CPI in a relatively fast manner. The report noted that, with the help